afternoon and welcome to the European crossover webinar. Actually, the daily FX Roundup, and we're about ready. We're not too far away from FOMC time, and you're seeing the market, see the euro together in a little bit of a bid after we rallied into a level that we're looking at, or I mentioned yesterday in the chat room, which is right at that 1074-ish area, and we rallied, ended up coming up a little bit, just a little bit above that 1076. Actually, we sat there for the good part of Asia initially, and then we eventually drifted lower. We're starting to get a little bit of a bid. Obviously, the dollar index pushing a little bit lower, and we'll go on and touch into some levels that we're looking at. Yesterday, if you're with us, we kept talking about this. Actually, we've had this on our radar for a while, and which is on the cable, with this 161% retracement here. And we certainly got this. We certainly got that off of this 2309 to 1959. Market came up there, tagged it, and formed a very nice gravestone doji on this 2-hour chart. And from there, we faded. Actually, got a little bit weaker on some weaker UK inflation data. We're kind of coming back as we're seeing the dollar roll back. I mean, we are expecting a cut, but some people are looking at potentially a hawkish cut. And then another one, which really isn't going to be resolved until later on this evening, depending on what neck of the woods you're in, which is the dollar yen. We do have the Bank of Japan. Now, we have rallied up here to the 78%. We kind of eased back a bit. Not a whole lot, but you can see here, kind of ease back here. Then we move back up again, challenge it, kind of ease back again. Looking at the levels ahead, what we're actually looking for, because we're not going to know until we get past BOJ. They're looking to go on and offer some stimulus. But the levels we're looking at is 1854 to 1881. I mean, 854 to 881. I think this is actually probably going to be, if we do see a quick jump in here, this is probably going to offer a pretty decent trade here on a very short-term day trade scalp basis, which would be against this 854. If we rally up against it, your risk is pretty measurable in the sense that we've got 881 here also. So we'd have to really take off, and the unknown would be the BOJ. So if we do get a rally up here, I like taking the the other side against that 854, and then probably see the market come back down to this same area into the 820s, 818s, and then lay that one off. To me, I think that offers a very good opportunity. If we do rally up there, we're holding up here, so that would allow the market to goose those stops, maybe a little, just goose some stops just above this area, which is, and have them take out 854, maybe get up to about 858, and then probably see the market going and slide back, going into BOJ. But once again, with BOJ, the door would still be open for us to go back up to these levels and potentially get all the way up here to 881, if we're just going to be sitting here. We'll have to see how that in itself goes and plays out. Looking at, let's go in and take a look at the euro. So the key levels that we're looking at the euro on a daily chart right now. You know that yesterday, or day before yesterday, we had 1033 as our bias chart support, and the market went through that, and we actually made a run down here to the 61%, which is the 997. We dipped a little bit lower, but we came back. And yesterday was kind of significant in the sense that we did have very poor German data, yet the market, instead of going, and at the time it was trading around 920-ish, and started to pair back into the German data, instead of going sub 110 again, actually held above it. And we spent the rest of the day moving higher, almost eclipsing the previous day's high. So we kind of eased back from that 1073, and now here are pushing the key level ahead. I won't say key level because we'd easily get past it, which is this 1113. But we got in our bias chart resistance, we're looking at 1113/1154. Here's the 1154. If we get, obviously we have an opportunity to break this downtrend line. So getting, above here and actually getting a close above 1113 will allow this market to continue to move higher. But we already know what we've seen the last time it did something like that, and each time it just turns around and rolls back over. But that being said, if we were to get a daily close above 1154, then this market should be up and on its way, if nothing else, for just plain old short covering. Because then even those that would short would need to cover, and even those that would say would not believe that the euro can rally, and they think we'll see 108, 105, maybe lower, even they would say, well, I'm not going to sell it here. I'll go on and wait till we go and make a challenge higher. And I think that challenge higher in time would be 1285. So once again, it's 1113 on the short haul, which isn't even that far away. 1113. And then 1154. If we get a daily close below 1154, not only we break this trend line, we break this trend line with gusto, and we take out this level here. You can see these touches coming across. That'd be key if we can go and do that. We'd really open this door, and you just want to be long and stay long, because at the very least, the market is going to challenge above. Would go to 1214, but potentially we can go up to 1285. And that may happen rather quickly, because you would end up having a lot of shorts going and cover. Even if they believe the euro would go lower, they'd want to reload at better prices, and better prices would not be, 10 or 25 pips above here. That'd be looking for a much more better move. Matter of fact, some would say, well, I'll scale in around 1253 and then I'll add some more 1285, or others might say, well, I'll take it on at 1285. That's going to be a good area to look for this market to pair back. But once again, 1113, that will allow this market to, break above this trend line. But we've seen that movie once too many times, and seen the market just roll over and fall back down again. Here we go. We're getting ready to break down here and roll over and fall back down. Okay, now we're on our way, roll over and fall back down again. Here, same thing here. It looks like we're going to take off, and then we roll back down again. So we'd be back above the trend line, but if we do get one above 1154, you not only break the trend line, you also break this level here, and we should see at that point, I want to say a plethora, but you should see a pretty decent amount of short covering at that point. If nothing else, just for shorts to reload at better levels for those that would still be bearish. Let's go and take a look at the cable. Well, we came up, and as I mentioned to you, and we actually came up to this 2503, which is 38%, but we'd already done that before when we saw the market pair back. But when we look at the 2-hour chart, and I think that is going to provide us a little bit better look into this. We got up to that 25.27, and that was confluence with 25.18, and we got a nice little gravestone doji, okay? And then we saw the market pair in and even come in even weaker on that UK inflation data. That being said, if we do rally, we can come into, I think here's this 25.73. There's a little bit more lower, but I think this is where you'd be looking at for this market now. There's a little bit more even beyond up to 26, but I think this whole area in here, the market would have a tough time after the run that it's had, to turn around and say, okay, now I want to get bullish and now add even more. You compare the differences between, let's say, with the euro. And look at we'll give you an example. That might be a little bit more of an extreme difference, but look at this. From a technical standpoint, and let's go back to this. So I actually want to look at the euro. There we go. let's make it for apples, so to speak, and let's look at the 2-hour chart. But you see, if we go and break higher, you can see what a difference here. You see what I'm saying? We'd be breaking trend line. We talked about that. And if we got above 1154, we'd really start scooting things beyond. Whereas, as opposed to, let's say, the cable, it's already had a wonderful run. I mean, a great run. Actually, if you think about it, Blake made a good point about it over the 10 days ago or so, saying, hey, look, if you're willing to risk, I think it was like, 100 pips or 150 pips or something. He goes, you can see well over 300, maybe almost 500 pips. Well, we got just that. I mean, look, we dipped down here, and then we really saw this market come back, and it's been fighting it all the way, fighting it, more short covering, fighting it, come back hard. So I think that if we were to come into this area, this zone area above 25.73 up to 26, I think you would probably see the market, we may hang up there a little bit. We may even pop a little bit above 26, but I think we'd end up having to come back to regroup and pick up some new longs. So I think that would be rather limited here on the cable. So once again, on the cable, what we're looking at is 25. I'm giving it up here to 25.73, and then on the downside, 24.30. I think we have 24.38 or 24.28. We'll take a look at that. Actually 24.13, and we're saying that if we get a dip down there, that would open the door down to 23.38 rather quickly. Let's go and take a look at the Canadian dollar. This has been an unusual one in the sense that, I myself thought when we got that news with Saudi and all this, I thought we were going to open sub 32, even though it had a great close on Friday, the past Friday, and we look like we're heading lower. Then Trump talked about the SPR, and we saw this thing start to turn around a little bit. We came back down, dip, but boy, we had continued to move higher. To me, this one is pretty clear in the sense that if we get above, I've got 3307 as a bias chart resistance. If we get a close above 3307, I think we're just going back up to these highs and going much higher. I think what I was saying was looking probably at like 150 pips on either way. We get a daily close above 3307, the bias chart resistance, or the bias chart support, which is through 3224. We get a daily close below that. Once again, looking for probably maybe not 150, but at least probably like 125 pips on that with the dollar CAD. We'll take a look here with the peso. Peso's interesting. We've come down here to this 1935. Yesterday we had our bias chart resistance at 1954, and we got up there. If you look at it on a 2-hour chart, we just took it out by just a little bit. And we turned around, rolled back, and we had a volume support level at 1943 with our bias chart support at 1940. Well, it slid through both of those, and we were kind of hanging around the 37. We came all the way down here to this 35. But if you look here, 1932 is a 61%, and you can remember this 1923-6 was just absolutely huge here, where the market was really having a very difficult time trying to get beyond this area. So I think that it's still, despite the pullback, and we're coming to 61%, this area really has to hold on a daily close. Now, the bulls lose the complete case if we get a daily close below 1923-6, but really, if you look at it, this market really needs to go on and make a stand here at the 61%. If we get down here and we just sit there for a couple of days, then really you're probably going to be looking for marked pairs to get any rallies would end up being sold and make the market really test and prove itself. On the upside, we got 1945 and then 1956 for the resistance. Support, well, I think we got it right here, this 1932, but it's 1923-6 on a daily that needs to be defended here on this. So there we go on that. Let's go and take a look at the cash dollar index. And here's going to be today's bias chart resistance here. And if we look on the cash dollar index, obviously we have wider ranges. Generally, like I said, we do these bias charts on the European crossover webinar. They're set up for for day trades / scalping levels, and some of the traders will use that to confluence with their own levels that they're looking at. And as I mentioned in the chat room, we've got a lot of traders with all different types of styles, different types of very technical analysis. Some use like I said, chart patterns. Others use harmonics and Elliott wave. Everybody has their own style, and also as well as their own timeline, and some will hold it for much longer, like Amanda does really well holding her trades, which are really swing trades. And then others, a lot of us do day trades. For me, I come in and try and scalp a little bit. Been doing a little bit here and there with reacquainting myself back with the crude oil market. But anyway, that being said, so we're seeing these wider ranges, obviously for good reason, because it's, we have to see how this whole thing plays out today. But resistance is going to be 98.76, and on the bottom side, 97.89. You can see the importance of this 97.89. If we get a daily close below 97.56, okay, that's that secondary support. You can see that here on the bias, and I do have it with an asterisk, so it's a daily close right there. If we get a close below that area here, there's a 56. It's really going to open the door for us to come down here to 96.50. Without that'd be 100 ticks lower. Obviously, that probably equate with the euro closing above 11.54 and open the potential for 12.85 on the euro. So once again, that's what we're looking here with the cash dollar index. Other than that, we'll take a look. Aussie dollars has its own issues, and after a nice run, we've kind of pulled back in here, and you can see the 68.34 area here, right there. But I think on the Aussie, we're looking here on the Aussie 68.16, so not a whole lot lower. And on the upside, we're not too far away from that either, 68.72. So we'll see how this goes and plays out. We do have some Aussie data also coming up later on. Let me take a look at this real quickly. So you can see here, and I'm in Texas, so my calendar's set on Central Time. But you can see here that We do have Aussie data, unemployment data coming out here. That's going to be at 8:30 Eastern, well, 8:30 Central Standard Time, which would be 9:30 Eastern. Okay, so employment prior was 41,000. They're looking for 10,000. And another key thing is on the Aussie is that they're looking for the unemployment. I think they're looking for that to move from 5.3 to 5.4%, which will really, what the way the market's viewing it is, will open the opportunity for a cut at the next meeting, which is in October. So just something to go on and keep in mind. Go move this out of the way. So just a quick move into the into the cross rates, and right here with the Aussie, and we're staying in a relatively tight range here. And you can see this is on a 2-hour chart. You'd think this was like a 15-minute chart. It's so tight here. And it's really two things pushing against each other. I mean, the potential weakness here for the yen, and then on top of that, the Aussie weakness. So we may be stuck in this area. One other pair that's rather interesting, I think, has been the guppy, which really came from the bottoms and really made a move up in here. And I think at this point, this was like 161% extension, I believe, if I remember correctly. And we took a dip, took a nice little dip, and then we came back up. We're challenging. We're trying to hold above here, but this one's going to be interesting to see. But we've already had a great run off of these lows here in the guppy itself. But like I said, today with the FOMC, obviously the focus is going to be on the dollar pairs. One last thing we're going to take a look at quickly is right here with gold. Obviously, a little bit better bid here with the gold. And I would have thought that I myself would have thought that we would have gone and had a better reaction from the gold. And let's go and move this into a 2-hour chart. When they had the Saudi blast. And so we're kind of keeping it tied, but once again, they're expecting a cut, but the thought is it may be a hawkish cut. To me, if you're looking, I'm thinking here is probably right around here, 1529, right there at 1530. Now that's on the spot, okay? That's on the spot right here at 1530. If we maybe we're going to jump into this, if we look at this pulled up on a fib. Well, there you go. 1530 is actually going to be the 78%. Okay, and we've got some touches coming across that. You see, here's some volume touches. We might be able to get above this, and once again, that's on the spot. It's not on the futures. You can compare the futures. A good example here is here on the crude here, trading at about a variation depending on following. If you're looking at the November crude, then you're looking at a difference of about, I think it was like about 15 cents or something like that here on the crude. But we'll see how this goes and plays itself out. Obviously, you're looking at 10-year yields continuing to slide back where bonds are going the opposite direction. So certainly we'll go on and offer, and actually bonds price going the opposite direction. So rates are still going a little bit lower. But if you look in here, 10-year yield may be just a bit weaker. Yeah, it's a bit weaker as compared to the bonds, because obviously this is on the yields, this one's on the price. So the bonds probably a little bit more favorable in the sense of yield, which may allow this euro to potentially work a little bit higher. But once again, like I said, the proof is going to be on the pudding in the technical levels. That's all we've got. Good luck for the day ahead with FOMC, and thanks for joining us here on the daily wrap up. And once again, like I said, this is a time of year right now to take advantage of the offer with ForexAnalytix and able to go on and get it at a much cheaper rate. And as I mentioned before, is to me, the strength is in the chat room, but we do offer the different types of analysis, whether it's basic technical, harmonics, Elliott wave, It's like, and not to mention also the data minder or the data flash that pops up. But we've also have the patterns in play with Stelios, Blake, Steve going to mostly do those patterns in play. But once again, this is the time of year, especially as volatility is heating up, to go in and take advantage of that offer that we have with ForexAnalytix. But once again, thanks for joining us here, and good luck on trading the FOMC.